Welcome back, everyone, to MYB Podcast. You guys are watching this podcast all over the world. Congratulations, you guys know it. You're alive, you're blessed, you're beautiful, you're handsome. You can't really complain. Other than that, you can talk to someone next to you. They would care in the moment, but in reality, no one gives a shit about you. You're in this journey alone. So, with all that chatting, the word for the day or the phrase for the day, we're gonna say it's faith and patience. Without faith, nothing is possible. Patience, whether you like it or not, you have to wait on your blessings. So you might as well be patient and happy while you wait. So in today's session, we're going to talk about 7 things to do after a big loss. We all want to celebrate after wins, right? So when it comes to a win, we know how to pose. Like I tell you guys, don't pose, but we're happy. We don't really learn from the wins, but we learn more a lot from the losses, right? So we don't react, we pause, we feel it, then we face it, right? Like I said, if you guys are in trading right now, nothing should make sense. Your body should be numb. Your body should feel numb. Reviews the trade are just decision without judgment, right? If you guys really think about it, if you guys really take what you guys could call a losing streak, because realistically now, there's no such thing as a losing streak if you really follow your plan, right? Because your plan just involves breakout structure, the 6 lines, supply and demand, order block. That's pretty much it, right? So how could you keep doing all of this and trade every day and not be disciplined, right? But notice what I said, right? I didn't say how to stay consistency after a losing streak. I just say after big loss, because risk management came into play with this section too. This session would also tie into risk management. Why? Because, for example, I can take 10 trades today, not today, in like 10 days I can take 10 trades and I can lose all 10 trades, right? But in that 10 trades my risk management was only $10. So yes, I lost slash learned 10 trades, but I only lose $100 slash $100. Vice versa, you risk probably $1,000 or 4,000 or $10,000 or 20,000, 100K, a million, half a mil, hedge fund. You short the entire whole companies. So it's like all of that you risking on that one trade. You see what I'm saying? So after that loss, how do you really keep going? The same way you do the next day. You keep going. Because at the end of the day, remember I told you guys in yesterday's session, every time you buy a contract with emotion, you should buy it under $10, right? Why and the process so long to it, right? So if you guys really think about it, right, your emotional trade don't deserve to win. Your emotional trades do not deserve to win. And your capital, you will destroy your entire capital when it comes to emotional trading. Because whether you like it or not, the market is open now. Money is getting pumped in the market. Liquidity is getting drained out the market. Either you're in it or you're not. Rebuilding your confidence with a small win, right? Realistically, me talking about this all for like however long the video take, it don't really matter because it really comes down to just 2 factors. One is the risk management, because like I said, you could lost $10,000 today instead of you lost $10,000. Why you couldn't do the same thing but risk $50? Why are you so greedy to make money? Your goal in the stock market is not to make money. First is to not lose money, right? And even if you're losing money, it's fine. But at least how much you're willing to lose? 190. How much are you willing to lose in a trade? Because if you guys think about it now, right? How are you really jumping into a trade to make more money? Yes, the stock market could make you a millionaire, right? But the journey of the stock market of being a trader is not to become a millionaire, right? It's not to really become a billionaire. It's the person you become before you become a millionaire. That's the fantastic and the damn near, that's the jackpot right there of becoming successful. The journey, the struggle, the story, that make the outcome more outrageously magnificent, right? So after a big loss, your confidence is usually short, right? Here's the trick. Don't try to swing for the fence next trade. go for the base hit, right? Small trades. Like I tell you guys, it all comes down to the risk management. So instead of buying a contract for $15, buying a contract for $50, buying a contract for 1,000, buying a contract for 1%, 2%, 3%, 4%, risk less. Cause why? It all comes down to trading view chart. Trading view chart. You should spend your 98 time of your time there on trading on the analytic chart, and 1% of your time just go over to the contract, and another percent of you just buying, press or sell. Other than that, you have to spend all your well, at least when you start in it first, when you start in the journey, because eventually you wanna start staring at the chart for quite a like, give or take, the first 2 years, 1 year, 1 year and a half, up to you. Then after you understand it, then you step away from it, because you get to some point when you realize the longer you stay at the chart, especially with the wisdom you get from trading, your mind is seeing everything at the same time. So, but once you get trading, it's like a hamster wheel. You get it, you get it, you get it. But you have to stay at the chart. There's stuff. That's one thing about the day trading that a lot of people fail to understand. It take a lot of time sitting on the computer screen with a notebook, journaling, watching other people course, watching people YouTube video, and actually take notes on this shit. Like actually, like this is like sit down. This is a class. Like this how serious you have to be about trading. And people would say they don't have the time. I get it. I get you don't have the time, because trading came into this world right now, and it jacked up the whole situation. Trading, AI. Matter of fact, trading was around, to be honest with you, but I never used to hear about trading, to be honest with you, when I was like 15, 16, 17, 18, because I'm a 2000 baby, so 2018, 2019, trading was there, but I never used to hear of it. Now all of a sudden, like 2025, trading is like all over the place, to be honest with you. So we gotta tighten your process, right? Losers are feedbacks, right? Ask yourself, what hole in my process did I expose, right? What you learned about yourself through that trade? Was it your risk management, lack of preparation? Was it your emotional controls? Was it position sizing? Was it an emotional trade or discipline trade? Don't just change random things. Adjust your system. Every mistake is a torture, right? Every mistake is a torture, and that torture is you losing money. I said before, human beings are afraid of three things: losing a family member, losing cash flow, and don't have no food. Come back stronger with discipline, not ego. And now that you feel revived, energized, the best you can do, guys, is if you're willing to risk $10,000 on one trade or $1,000 on one trade, at least understand the outcome of it. Because in trading, you can low-key predict the outcome in your mind, like at least see how it's going to play out. One, instead of risking $10,000, I risk $1,000. So one scenario is in the stock market, so the moment I press buy or sell, one scenario is shit, I lost/learn the $1,000, because on forex either you just put your lot size in, and that's it. That's your lot size on trading log. For metaphor, that's just your lot size, $1,000, $100, and after you get that $100, you're done. Same with Robinhood. If you're buying if you're buying a contract from Robinhood, if you're buying the whole contract for $25, $100, $50, in Robinhood, they don't really care where you buy the contract, because as long as you buy because that's the share price, you have to buy the contract there. On forex and trade locker, you can put in how much lot size you want, but in Robinhood, you have to buy at a specific price that they have the price at. So that's not even a problem. Who cares? You buy it at that price or less. Usually, if you're starting off, buy a contract under $10. Why? Because you do not, money in the stock market is secondary, right? Look at the chart first, because the chart, regardless, is gonna flow. So all you have to do is buy a contract for the first. Not even buy a contract. You could even fake buy a contract and press it to the buy list, and it's gonna, to your watch list, and it's gonna play out like it's actually money real, but it's not real money, but it's gonna play out like the real scenario, like you actually buy the contract. So that's like a cheat code if you guys want to really risk a lot of capital. Test your plan with your watch list power option. So we go in option, we say we go into SPY, we buy a contract for $56. We go on $60. We buy that, we add to, we don't buy it, my fault, we add to watch list, man, and then we go back on the chart. But on the chart, before you even buy a contract, you should record yourself talking to yourself. Why did you buy this contract? Okay, buy this contract here, supply zone here, demand zone here, breakout structure there, or 6 line there, pre-market high, pre-market low, 5 minute high, 5 minute low, retest there. If it's a run, I just can't trade. If it's no pullback, can't trade. So if stuff don't meet your criteria, you just can't trade. Because why? Trading is just trading is just one skill in your life. You know what I'm saying? Trading is not really your life, but it's that one egg out of the basket that's gonna bring all the money you need to back the other basket, like the drop shipping, the e-commerce, the real estate, the hedge funds. All of this money come through you just trading through the market, and wow, you guys get a cash flow, because there's no other profession besides probably selling drugs or whatever. It's gonna give legally. It's gonna make you the money you want to retire the family, build the empire you want. Because regardless, you have to detach from the identity, right? For like I said, you have to detach yourself from the outcome. You're not a bad trader. You're just mad at the decision. You're not failing. You're just failing forward, right? Pull up the chart, rewatch the trade, rethink the deal. What did this setup look like? Did the seller follow my rules, sizing? Like I said, if you guys journal it, your journal should be like a cycle. Like I know when you guys was in school, right? When the teacher make you guys had to make lines. Like for class, I was writing lines for almost every teacher. They was like, you have to write 3,000 words saying, I will not talk in class, I will not disturb in class, right? So I was writing that shit probably like 500 times for some classes, right? So that's how your trading journey should look. It should say the same thing over and over. It was a breakout structure. It was a disciplined trade. And if you do come across an emotional trade, at least you buy the emotional trade, like I said yesterday, for under $10, because your emotional trade do not deserve to lose. Do not deserve to win, and it's a swing, so it's for tomorrow, right? So review the trade or decision without judgment, right? You always go back with a clear mind. Especially if you guys smokers out there, go back to the chart after you smoke, because after you smoke, you get more honest with yourself. You're relaxed, you're more free, and especially when you're writing, your brain just take over your writing skills, because writing and reading is the most to go-to skills, especially when you're fresh off of wood. Just hit the brain with that for like 30 minutes, and then go but your day. Either you write or you read. One of those two for 30 minutes, and then be back and moving. So this is where most people go wrong. They either avoid reviewing their losses along together. That's the hardest thing about it, right? Failure to review. Because why? They lost, they don't want to do it. Now I guarantee you, I won't say guarantee, but I'm pretty 80% certain if you guys did win the trade, you guys would go back to look at your wins. Because why? You probably had a screenshot of your win. You probably would already send it to someone. You probably would already have it at your home screen. You probably would do a lot of things with this trade. But when you lose, you don't want to do the same, right? You beat yourself up during the review. Like I said, the review should be the clarity. Why? Because you are not your body, you are not your mind. The past is the past. The whole is gone. All you can do now is go back and learn from it, not dwell. Because if you dwell from the past, you just messed up your now and you might destroy your future. But if you go back and learn from the past, you recreate your future by now, right? So you're not a bad trader. You just made a bad decision. You're not a failure. You're just failing forward, right? Pulling up the chart, like I said, all fun and games, but I can't really say what level or how you guys it, because it's like a lot of strategies out there on trading. It's a lot, but it really don't comes down to the strategy. It all comes down to the mind thing, right? To the mind thing, your system, your plan, your confidence, your mind, your future. Maybe you blew up your trading account. Maybe your business deal dropped. Maybe you trust someone and you get burned. Maybe you put your house on a contract. Let me ask you this, right? Have you ever taken a loss so big that it made you question everything? That it made you question? Personally, yes, I did. I wouldn't say I take a huge loss. That's the thing but my situation, what I'm about to give you guys, and your guys relevant. Both of us gonna have two different perspectives. My personal losses, right? It don't be really extravagant, because why? It's multiple loss add up. So let's say I gone for let's say I take 5 weeks, right? Five, not even 5 weeks, 5 trades. Let's say 5 trades. I lost 5 trades. Like I said, the same scenario earlier. I risk in like $10 per trade, $20 per trade. So even though I lose 6 trades, my risk management the money aspect of it wouldn't be no liability. It wouldn't matter to me. I'm just be like, damn, what's really going on? But at least the plan is the same. Everything is the same, right? So in you guys' situation, right? You guys' situation, you're putting everything. You're putting the entire portfolio on one trade. Like, how would you putting it in? I don't mind you putting the entire portfolio on one trade, right? Because if your plan is so smooth, you could put the whole portfolio on the trade because it's a disciplined trade. And even if price go against you, yeah, you're gonna lose slash learn a little bit more than usual. But if it go against you, you're right. But at least you wouldn't know it go against you because why? You spend a lot of your time practicing. Because I would avoid you guys staying off demo accounts. Like if you guys ever start trading, do not do no demo account. The demo account is a waste of time. All you need to do is go on TradingView, type in Bitcoin slash USD. The Bitcoin don't stop. Bitcoin is evolutionary. It don't stop. Bitcoin and time related. It will never stop. It's always going forward. But time go backwards too. Yep. So Bitcoin and time follow. Time go forward. Bitcoin go up. Bitcoin come down. Time go up. Time go forward. But it never stops. It never stops. So all you guys gotta do, go on that chart and use that as your demo account because why? It's a live chart. That's the difference. On demo account, the chart is already preset on one if, and it's already the past. You cannot really learn from the past, right? Like that. You might as well learn from the future and the present, which is Bitcoin slash USD that's happening right in front of your face. So all you gotta do, wait for setup to come. The best way to practice it, the way how I get profitable from doing it, every time you leave the house, like if you have to go run an errand, run to the gas station, whatever, before you go, pull up the TradingView chart, see if you can get a setup. If not, then go. Come back, like before you take a shower. If you see a setup, just draw it out on Bitcoin and just go. By the time you come back, you're gonna see the Bitcoin play out. Before you go to sleep, draw up the chart. If your plan, not some random ass trade. No, if your plan, your discipline plan was on the chart, take the trade and go to sleep. Tomorrow morning you wake up, you see what I'm saying. So you can do all this by through practicing, through repetition. But it's all fun and all. But if you guys blowing the entire portfolio on one trade, at least make it a disciplined trade. Because who is me to tell you what to do? And who is you to listen to me? See what I'm saying? Because I don't know you. I don't care about you. You should feel the same way about me. You don't know me. I don't care about you. Because why? We human beings. We don't care about each other, but we chasing our dream. So the best case scenario you can do, if you want to put all your eggs, not even all your eggs, let's say you want to put a 500,000 quadrillion on a trade, at least make it a disciplined trade. If it's a disciplined trade, suck it up, ride the wave, win or lose, win or learn. That's the emotional trade, and that's your plan trade. Because why? If that setup happen again, you would take it again. Now, you cannot do the same off an emotional trade. You cannot put the whole portfolio off an emotional trade because emotional trade does not deserve to win. And if you're gonna put it on an emotional portfolio, you have to buy the contract for a swing, which in forex and metaphor, you guys can do swing because it's different. A lot size is different. It depends price hit TP or stop loss because on Robinhood it's about contracts. Metaphor and forex is different currency, different. But at least Robinhood will give you the contract as long as you have the expiration date, you're set. So how do you guys bounce back from these traffic laws? Don't take it. That's how you guys really bounce. And if you guys do take it, if you don't bounce back, it's fine. Because I don't care if you bounce back. Because the less you put, like I said before, if you're not in the stock market, that's great for me. Because that pretty much your stop loss about to get hit. Your liquidity gone regardless. So you just saved me some cash flow. Because end of the day, you playing against me. So if you're not on my side, you probably just worth shit, to be honest with you, because at the end of the day, I'm coming for it all. MYB to the world.